Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us from the MarketSite studio in Times Square, New York City, we have Callie Cox, U.S. Investment Analyst at eToro, to discuss retail investor activity and if inflation fears have subsided. Callie, it's great to have you with us. Welcome to Trade Talks.
Yeah, thanks for having me.
A lot of mixed signals in the market at this moment. What are you hearing from retail investors? Do they think that we're in a bull market?
Well, retail investors don't believe yet. About 14% of investors that we surveyed in our quarterly retail investor beat survey think that we're in a bull market. So the majority don't think we are, but they're not opposed to that idea. They're kind of in the wait and see moment because they're a little nervous that prices could fall back down. But at the same time, they're feeling optimistic. They feel good about their investments. A majority of them feel confident about their investments. So I think it just takes a little bit more kind of deliverance from the market for them to believe in it.
Do you think investor fears about inflation has subsided?
So they've actually picked up, and this was a surprise to me. There's one question we ask in this survey. It's, what do you think is the biggest risk to your portfolio over the next 12 months? In the last quarter, Q1, we asked it, and investors said recession. This quarter, they flipped back to inflation. And inflation was the biggest risk cited by far in 2022, which tells me that they're less worried about a recession, which is good news. But I mean, inflation isn't a good substitute. So I see that. I see an economy that maybe is at risk of overheating versus getting into a drawdown.
So what can you share about retail investor activity? Are they sitting on the sidelines, or are they continuing to stay invested or going into new investments?
Well, individual investors never bailed on this market. They may have traded a little bit less, or they may have been a little more conservative with their investments, looking at bonds, cash, maybe commodities given the global environment, but they never really sold out. And this is the big difference that we've seen between professional investors and individual investors. Professional investors have that shorter time frame, and we've faced a lot of uncertainty. So they've had more pressure to beat their benchmarks and make their shareholders happy. But at the same time, retail investors can have that longer term time frame. In fact, many of them are longer term. So they've stuck it out knowing that they have 5 or 10 years to wait this thing out.
That's such an interesting point that you make, because the industry has been evangelizing, invest for the long term, don't worry about what happens with the stocks tick for tick. And it does look different in the institutional environment because, to your point, they have to make their benchmarks. We know what happened this year with the tech sector and concentration. If you were not exposed to those stocks, there's a lot of catch up to play there. But it is encouraging to hear that they are staying in for the long term. What themes are you watching in the second half of the year?
So I like to think about story themes. Of course, we're watching AI. I mean, AI has great potential. We want to see companies start spending money on it and making productive investments so that we see it flow back into the economy. So we're excited about it. We're just not completely buying into the hype yet. I mean, we're also watching the millennial generation and younger investors in general. Right now, they're more confident about the economy, about their investments, about their job security than their older counterparts. And it's especially interesting considering that this job market has been more friendly to millennials and younger workers. But I mean, as we all know, student loan debt is in the headlines. Younger investors, or investors of all ages, are going to have to start paying back their debt in the fall, and we may get a SCOTUS decision tomorrow on the student debt forgiveness plan. So that's a theme we're watching that could change a lot over the next 6 months. But there are a bunch of different themes, including the real economy and deglobalization.
Well, it'll be interesting to see your next quarterly report on retail trading activity, because I believe the average student loan payment's anywhere from $300 to $400. I wonder if that impacts their ability to invest, even if it's the shorter term, using shorter term funds, or have they been putting that money aside until it's time to pay? I mean, you would hope, but it'll be interesting to see how they respond to the next report. So great to see you, Callie. Appreciate the insight, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.